Bitcoin next big move. Watch 95k. Bitcoin is standing at a critical crossroads right now, the 95k selling. And this could be the last real opportunity before the next massive explosion. The 95k resistance isn't just another wall. It's the final barrier that Bitcoin must break to launch the next historic bull run. And right now, pressure is building fast from both sides. Whales are quietly stacking, ETF inflows are surging. Meanwhile, most retail investors are still hesitant, stuck on the sidelines. So, here's the real question. Will Bitcoin finally smash through 95k this time, or are we in for one more violent shakeout? Personally, I don't think this is just another bounce. This time feels different. This time feels bigger. Hey everyone, it's Neil. Welcome back to the channel. Today, we are diving into why Bitcoin is stuck between massive resistance and fragile support, and why this moment could set up Bitcoin's next major rally or correction. So, before starting, make sure to hit that like, subscribe button and let's dive in. In today's video, we are going to break down why Bitcoin is stuck right under 95k, what ETF flows, heatmaps and whales are signaling, and whether the real breakout or a deeper pullback could be just around the corner. Let's get right into it. Bitcoin is trading against major resistance, 94k, 95k, and forming a CME gap. Michael Saylor believes Bitcoin will eventually hit $10 million, signaling massive long-term bullish sentiments. Big outflow from exchanges, whales are accumulating aggressively, third largest outflow in Bitcoin's history. Despite the broader market still being cautious, long-term investors and institutions like BlackRock, the state of El Salvador, MicroStrategy are buying Bitcoin. Bitcoin's short-term charts are flashing warning signs. Bitcoin is creating a bearish divergence on the 4 hours RSI, higher highs in price, lower highs in momentum. Funding rates are negative, meaning the majority of traders are short, meaning short sellers are paying long holders to keep their positions open. To be clear, funding rates aren't at extreme negative level yet, but they are steadily negative for several days now. That means bearish pressure is quietly building, and historically, such setups often lead to powerful short squeezes when momentum flips. This week could be critical for Bitcoin's direction. Major macro events are dropping every single day. Tuesday, the JOLTS, the job opening report. Wednesday, ADP, non-farm payrolls, GDP and PCE inflation index. On Thursday, ISM manufacturing PMI. Friday, non-farm payrolls, unemployment rates and average hourly wages. How the market reacts to these reports could be the deciding factor. Whether Bitcoin finally blasts through the 95k selling, or whether we get another short-term cooldown first. These macro reports matter because they shape investor expectations about interest rates, inflation, and economic strength. If the data shows the economy slowing or inflation easing, it could trigger a risk-on environment, strengthening the case for Fed rate cuts and supporting broader market momentum. And for Bitcoin, that will mean more liquidity, more demand, and a much higher chance of finally breaking above 95k. But if the reports come in too hot, showing a strong economy and sticky inflation, it could delay rate cuts and put pressure on Bitcoin in the short term. Plus, major tech companies Apple, Microsoft, Amazon, Meta are all reporting earnings, and the Bank of Japan's interest rate decision is also coming up, expected to remain unchanged. Two things the market is watching closely. First, US-China trade conflict showing signs of easing. Then, the Fed clearly ruling out any early rate hikes. We can see bond yields are falling again. In addition, Treasury funds saw a record 19 billion USD inflow last week, even bigger than during the COVID crisis in 2020, as you can see on the tab. Several Fed officials, including Cleveland Fed President Beth Ham and Governor Christopher Waller, hinted that if labor market data weakens, rate cuts could come earlier than expected, in June, possibly even 4 cuts this year. So, the outlook that the interest rate will be frozen in May is 90.3%. But the probability of a rate cut in June has risen sharply, now standing at 58.6%. As you move further into the year, July, September, October, December, you can see from the table that probability shift toward lower rate ranges, like 325 and 375, implying multiple cuts priced in. saying there are outlooks that the interest rate can be cut 4 times within the year is reasonable, based on how the CME probabilities are trending. The next Fed meeting is scheduled for May 5th, and the interest rate decision is scheduled on May 8th. So let's stay tuned. Let's turn to the heat map because price action is showing signs of pressure. Over the past 48 hours, Bitcoin has shown clear signs of weakness. We started around 95k on the 26th, but the price action steadily trended lower, facing heavy resistance every time it tried to bounce. You can see several bright bands forming around the 95k, 96k range, signaling dense clusters of short liquidations and heavy sell pressure. Around the 27th, early morning, Bitcoin tried to spike upward, but it was quickly rejected near 94.5k. That spike triggered some liquidations, but clearly there wasn't enough follow-through from buyers. Instead of breaking higher, Bitcoin sharply reversed, dropping down to around 93k. From there, Bitcoin stabilized for a bit, moving sideways between roughly 93k and 94k. But again, not strong bullish momentum appeared. Late on the 27th and into early 28th, we see another leg down. Bitcoin slid toward 93k, where we now see another thick yellow band forming on the heat map. This suggests 2 important things. There are large liquidation clusters just below current prices, indicating many leveraged long positions could be at risk. 93k is trying to act as a short-term support, but it's fragile. If 93k fails, Bitcoin could drop quickly toward deeper support levels around 92k or even high 90k. Meanwhile, the heat map shows a strong wall of selling pressure still overhead around 94k or 95k. Until Bitcoin can clear that wall, upside will remain limited. Now let's go for a summary of the current structure. Immediate resistance at 94k, 94.5k. Stronger resistance 94.8k, 95.6k. Immediate support 93k. Deeper support 91.5k, 92k. Conclusion: Bitcoin is stuck between a heavy resistance and fragile support. This suggests that sellers currently have more control, and unless bulls can reclaim 94k, 95k quickly with volume, the risk of a deeper drop remains. Hehowever, a strong defense of 92k could also set up the next squeeze if short gets too aggressive. Tough cookie, I told you. Now, let's take a look at the fire map and what the whales are up to. And you can see also that a sell wall is being formed at the upper 95k level. And if we check the movements, the largest whale, like $1 million, $10 million, is showing a steady trending upward, slowly accumulating volume. While the rest of the lesser whales are all throwing volume during the same period, the overall order volume was shown as selling. The orange, green, blue and purple lines, representing smaller orders from 100 to 100k, are either declining or flat, meaning retail and smaller traders have been selling or staying cautious. However, you can see that they are putting in volume little by little at the current point in time. We need to watch if this trend continues. Whales are staking quietly while the price consolidates under major resistance. This is a classic pre-breakout behavior, but for the breakout to succeed, Bitcoin needs to punch through 95k with a strong volume. On-chain indicators show smart money is accumulating hard. Big net outflows from Coinbase, likely large institutions buying. Large players are accumulating Bitcoin for long-term holding, not for immediate trading, signaling strong holding conviction rather than selling intents. CryptoCant's bull score index spiked from 20 to 60. It's a rapid increase in market demand. Addresses strongly accumulating Bitcoin added 200,000 Bitcoin in the last 30 days. Bitcoin's realized price, or short-term edge bands, is now lower than the market price. Bullish signal. And the fear and greed index rising sharply from 37 to 60 means the sentiment is improving but not overheating yet. Importantly, whales holding 10,000 Bitcoin are actively buying with a buying score of 0.9. 1k, 10k wallets are buying too with a score of 0.7. And the retail is still sleeping. So, to wrap it up, Bitcoin is stuck between a massive resistance and fragile support. Short-term volatility is likely, especially with all the macro events this week. But the bigger picture remains extremely bullish. Institutions are stacking, whales are buying quietly, ETFs are seeing strong inflows, and the real breakout? It's still ahead of us. Every dip could be your last easy opportunity before the next major leg up. So, stay patient, stay prepared, and, as always, stay sharp, stay informed, and I will see you in the next one. Bye bye.